Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording here about half an hour before the close on Friday, the 21st. On today's show, the calendar turned to summer this week, and it already feels like we're in the dog days of August and the summer doldrums. However, there's a lot going on underneath the surface, and we're going to cover it all on today's show. My name is Ben Maldonado. As always, I'm joined by my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great. Short week.
Are you feeling in the summer doldrums?
Oh my God, yes. And that, midweek break didn't help.
No, it kind of threw everybody off. But as I said in the intro, it's gotten quiet. There seems to be a lot of indecision, disinterest. I don't know what it is, but there's a lot going on underneath the surface. So let's see if we can dive in and see what things look like here in the ES and the other major markets.
So let's start off with the ES, and we'll look at the
beautiful target you had last week.
Target worked out perfectly. And actually, that's the only number that was on the board, above the support. And we just, we had some good follow through after trying to get up above that. Well, what do you do now? I guess the trend is still up. We talked about the trend lines. I was holding the 1 by 1 in a very strong way, 2 by 1. Everything's just very bullish. I mean, we're practically going vertical. What are you going to say?
Yeah.
So what do we do now? Well, we trade it. We have to trade it to the long side. Is this 55.66 some kind of a big turn? It could be. I mean, we have timing cycles that come in every so often, and we also have price resistance levels perhaps more often. So not every resistance is going to be it's slated to be a big high.
And that high came in to the day on one of Gann's favorite cycles, the seasonal cycle, right? The summer solstice.
Yes, it certainly did. And that's something to watch. And anytime markets make highs or lows on one of those 4 dates, those are important things to watch. And well, we're watching it for sure. And we did run up into that. It got pulled right up into that. So that was kind of nice. Anyway, let's take a quick look at the, here's the cash chart. And this is the one we've been using for reference just to make things easier. We had a square 144, came back 50% of the square, a little bit of a struggle at the 144 level. And we eventually took it out on June 4th. And then we started trading higher. So, basically as a rule, if you're going to use squares for trading and angles and dates and price levels, once the level gets taken out, when the square gets taken out, really it opens the way to the 50% of the squares or the next target. So based on that, on the cash chart, we have 55.60 as the next target. If we can hold up through all of this, and we are 3/8 into the square, looks fairly strong. Maybe, looks strong on the chart, but not necessarily the internals. So
no,
but those are all, we talk about psychology and the news and what's happening and what's happening on the chart. What do you lean on? We always talk about leaning on the chart. That's really the only thing we can rely on. And here it's the same case, nothing really different. I think the uptrend is still intact. I don't have any really strong timing points. We have some coming up, but I don't have any big ones here.
On that chart right there, you could pull all the way back to the 144 and it'd still be bullish as long as it held.
Oh yeah, definitely. So, and the way we're going though, it's a lot about the consolidation versus having a market turn, like a bigger correction, right? So now here we do have a timing point and, a couple of days off, but we're right there. Again, we come up against 216. If you were to drop a line here, that's 216 degrees up from the low in October
of 22, right?
Of 22,
big
right?
Low, yeah.
So that makes 2052.31 sort of the support level.
Yep.
And if we take it all kind of ties together. You can see the pullback here is just about 72 degrees. And, everything ties together. That's why if we use that low, you can see how the 144 up and the 216 from the other one. So
right
this level
in the same
is
spot.
Exactly. Like you said, if it's above this,
Huge.
yeah, it's still very good.
Yeah.
And we'll just go with that. So that's it. If the market is going higher, it's going higher. If we come up into some timing points, then we can talk about it. Otherwise, it brings me back to the time we were squaring out here. And that was, we had a lot of points here. We had weeklies, we had dailies, we had degrees of movement.
Mm-hmm.
And one of the things I said was, look, there's a lot of things here. And if we end up taking this high out without a good, proper correction, which is kind of up to debate, right? What a proper correction is,
Right.
that we're going to go a lot higher. And I would say this correction just going half a square
It's
is a
not a
very,
lot.
pardon me?
It's not a lot.
Not a lot, which makes it very bullish, right? It's a very bullish
Mm-hmm.
kind of correction. That's when you wait to see, all right, did we get a lower high and then turn down, which we didn't get. So once you miss those two, whatever starts next should be strong, and it should take us up into, to much higher levels, and there's a stronger timing point in the future. And so we'll talk about that. So for now, everything looks okay. And we can go back to our chart. I really don't have any levels here because at these levels, we could correct hard, and we could be in, probably half a day's work. We could be back at 53.78,
Mm-hmm.
which is here. So I don't really have any big support levels here. That said, we'll go back to the 30-minute, and I have plenty of levels there we can look at, and that'll help us get through next week if we're still below 55.66. But the basis, the daily, we really need to get above that, obviously, right? And if we can get above it, well, it really, this is the 50% of the square, by the way. The green line is covering up the red line that we see
Yep.
here. So if we can settle above that, then it really opens it up. The 216 up will be around
Where's that?
58. That's 58, 56.
Sure.
So we can go there, when markets run, they run. So but we're also seeing a little ABCD price action setting up. And I
Yep.
wanted to, actually, I wanted to do it on the cash chart because we had a lot more detail in that square. But these are things you just watch for. And it just so happens it just happens to be at the top of that zone that we
Yeah,
talked
it's
about.
about 60 or 56.10, isn't it, in that area?
No, well, it should be, yeah, 50, yeah, right in there. Yep.
Mm-hmm.
So, and the line is 56.13. So
Mm-hmm.
anyway, look, it's a ABCD point, and we're coming into a square. No question about that. And square line.
Mm-hmm.
And if we can get up into that zone and make a higher, little bit of a higher high, that would pull us right into that timing line.
Yep.
So there is stuff to watch, but it has to need some movement, So in order for that to really click into place, we'd have to just, get ready and run up there one more time. And that lines up with a number of things. So I wanted to go through that. I think it's always good to, one of the things we do is we always, watch it going forward because we want to see what's coming up, what kind of cycles, that's the whole thing. And remember, we're going off the October low from 2023, and I'm taking that as the where the new leg started after the at least like a 3-month correction. So that is a new leg, and that leg. So this timing line is no joke. Is 144 plus 36. So that's 180. That's 180 from that low.
That's a big one.
It's kind of a big one, I would say.
Mm-hmm.
And it's 180 up here. So it's 180 by 180 right there. Okay. And I will mark that box just so it's already marked, but
I remember I was showing that on Nasdaq last week, the last few weeks, that 180 by 180, which we've surpassed, but it's there.
Yeah, it's there, right there. And if I didn't mention it, it's hard to figure all these things out, but just so you guys know, so the 55.66 coming up on, let's see what that line comes in. It's coming on July 8th,
Mm-hmm.
5th to 8th, 5th through the 8th. That's where the line comes. So 180, another thing, you don't get 180s every day. So we have to
No,
watch
sir.
that.
Yep.
And if you were to look at just to give you a sense of measurement and scale, using the square 144, we come up to a point, a decision timing element about every 36 days, which is not every day, and it's fair enough. I think it's spaced enough. And if it's a square of 90, it'll be every 45 days. So just to say, and we do have a good run going here, and I wouldn't be surprised at terminating with a nice ABCD.
False break.
Yeah, finishing it up, it'd be great.
Yeah.
At least for a little one. So we'll see. We'll see what else is lining up with this. We want the higher time frames to show up as well. This thing. I mean, I play with
This is
geometry.
the circle. Yeah.
Well, the thing is, this is more of a passive thing. We're just watching this. This is not something you want to trade. But one of the things, and we've done some circles on the show in the past, and they've worked out just like they're supposed to. And here the deal is, we're coming into the very the sharpest angle of the circle, and this is where the market can usually get into some kind of a blow-off move, right? Or it'll finish up as it's going, parallel. I mean, we're pretty parallel here. Not as much here, you see, the angle is there, but now we're getting very close. If you go a little bit longer, it'll be, a lot more parallel.
Yeah.
So July 8th lines up to be, I mean, look at that, how beautiful that is. It's exactly lines up with the edge of the circle.
Nice.
You see that? And so I didn't plan that. I mean, that's
nope.
I'll put that line there.
You could not force that if you tried.
No, you can't. So anyway, that's something we want to watch, because it really takes 2 points and a little bit of other work to get the whole thing to fit. So why am I bringing this up? Well, if we do get some kind of a high and we break through the circle, and I'll keep the chart on here. We can go back and when it happens, because it's bound to happen, right? This is not gonna. There's no way we're gonna stay in the circle forever, especially past the
8th,
July 8th.
Right.
We have to exit, folks. So we'll see what happens, how it happens. Now we have another piece of the puzzle, which is, hey, we do have 180 by 180 coming up. We're just right there now, so it'll be very easy for us to pull back here a little bit and go back right up into it, make a little bit of a higher high. And at about the same time, we'll be exiting that circle we just looked at. So it's very possible, right? Okay. So on the cash chart, same thing. We have the 180 by 1. It's actually 180 in price. And that comes up at, 55 coming off that October low. See, what else did I want to talk about here? Oh, and the square. It's not a super strong one, but it's 252, which is still not bad. So 252 by 180. We can watch for that. And remember, this is the calendar day chart. So if the calendar day lines up with the trading day chart, that's something you want to watch. It seems like they're both more or less lining up. Here it's July 5th, and the other one is July 8th, right? It's very close. So we want to watch that. Looking at the Dow, not much going on, but I'm going off of the October low of 22. Well, I shouldn't say not much. We did go up 180 and we stalled out, and we tapped it 3 times, and we corrected. But it's kind of a bullish. We talked about that. Hey, remember in the S&P we talked about long as it's
staying above, yeah,
exactly, right. So Dow did exactly that. We were holding above, and what did we say? If it's holding above that, it's still bullish. So yeah, and so we're kind of trapped between these, at this the lower part of the square. And the question is, what are we gonna? We're definitely getting sort of an ascending triangle, and we have to kind of see how Dow performs here. If we break out of that, there's only 2 things that can happen. We break out, perhaps a retest, and we fly, or we break out, false breakout, and we dump. Right? That's the 2 ways these things end up unfolding. Let's see what's happening in the Dow. It's pretty much the same timing cycle. But far as price goes,
It couldn't make it up to the 144 yet.
no, it couldn't. But it did do the 144 here.
Yep.
And if you go 36 back, we did the 90 here.
Mm-hmm.
So that 90 was big, that's why I was a little bit confused. I mean, that's such a perfect run when a 90 runs up and corrects. Although I can't complain, the Dow's actually playing out okay. Lower high, did a
Lower
90,
high.
corrected,
Yep.
lower high, came in, lower high so far, right? Sure, we could
Yeah.
go and make a new high, but so far it's doing sort of a little bit of like a flag, or the ascending triangle. It's that pattern still in there. So you see why we can't just get on board with both feet, like their Dow's doing something a little bit funky, right? Because we did get up into the line. We did have the timing come in. And if we take the 90 from the October low, we can be up at 135. That would be around 41.76. And the timing would be, of course, that 180. So it'd be July 8th. But that would be a hell of a run for the Dow to make in a very short time.
Yep.
But you don't know.
And it's been struggling for a while now. We'll see if they
Yeah,
can.
it's a full struggle. I mean, after he got tapped on at the square here, it
Mhm.
really kind of went dizzy, right?
Yeah.
It's sideways, but it's holding.
It's still holding.
It's holding very well. So we'll watch that level. I had 38, 337 here, probably from another square, but 90s, 38, 190, it's about 100-point difference. But that's the level to watch for the Dow for a longer term correction. Long as we're above that, I would say, and we're following the 1x2. I think it's in pretty good shape. So the cycles we're talking about, the 90s and the 180s, these are all coming up, rolling up in the future. And that's like the important thing to keep in mind, right? So we'll continue to watch that. Let's look at the 30-minute really quick.
Yeah, so you can see all the intricate levels.
Yeah, and I think for a weekly show, a 30-minute chart is probably good because only so much can happen in 5 days. I might have to eat my words next week, but all right. So coming into this week, we had 54.95. Got above that. Here's our recheck.
Test. Yep.
When we blew right through everything, right to 55.62, which we talked about before. And then it slowly, through overnight, got on top of it, stayed on top of it through the holiday. And we went up to the 50% of the square, which I posted, on X. It's around 55.84. And that's, time and price was certainly there, and we corrected. And the thing now is, and we talked about how it's going to be weaker below 55.62. And once we broke that, the next level really is 55, this 55.39 level. And, if this was really bullish, we would hold above it, right? There's no question. And we didn't. We clearly got stuck under it, below. So this, unless we make one of those wild runs in the last 20 minutes or 10 minutes and somehow closed above it, this is weak, 55.62. We couldn't even get near it to retest it from after the break. The highest they could reach was 55.56, and just kind of hung out around 55.39. But most of the price action is below. And one of the things I mentioned the other day was watch this channel. See how clean that was running this entire time. And we broke
lost
through
it. Yeah.
We lost it, and we lost it after hitting the key price level. And also in time, of course, basis the 30-minute. Anyway, this is sort of our canary that we trade, but it's something to watch, unless we can get above that. I think 55.39 might be the new sort of mean reversion level. So we'll watch it carefully.
Some of this pinning also might have to do with that big OPEX today as well.
Yes, but it's interesting where
we're pinning.
Yeah, it's right. It's right below.
Yeah.
So we'll take that for now. We'll roll with that.
Yeah.
So for next week, it's really 55.39 will be the place to start with on the 30-minute. And you guys have the other two important levels, which is 55.62 to the upside, meaning if we somehow, we can manage to hold above it like we did here, then, we can see a challenge to the high we made this week. That's 55.83, 84 level. And if we somehow can't get above 55.39 and there's weakness and trend lines are holding, I would say, 54.95 will definitely have to be checked. And if that's the case, knowing that we did hit a major resistant level on the daily, I think we could probably expect some kind of a correction, maybe not from a cycle ending of a cycle perspective, but a little correction. And maybe run back up, and that might give us the 1 or 2 day correction, might give us the sort of the pull or the flush that's needed to get back up onto the 8th and square out at the high.
Barry, we do have the next Rebel Yell cycle hit Monday, so maybe that'll kick it off.
Whip it up into that. Yeah, that could be. So anyway, let's go on to the weekly and look at that. So here's the weekly chart we've been using, and we've been going off the low back in 2009 this entire time. But today I want to bring it up to the current leg, which is pulling into a 90-week run, July 8th.
Look at that.
Week of July 8th.
July 8th. Nice.
So you see, there's something bigger. 90 weeks is a big deal. That's
big deal.
So, and a 90 is very active. How do you know that? Well, I know that I'll show you guys. Since it's a slow day, we can. It's important because you can see how we can tap the 90 here before moving higher. All right. That ABCD is embedded in here. So that's the ABCD we're looking at for the last leg. And
yes,
which is, it's a legit target, not just a legit target, but a legit way to end the leg.
For sure.
So we have price and time here setting up for the week around July 8th. Price, if we can really get to price, it'll be 56.70 basis the weekly. We might or might not get there. But I've noticed on the weekly, the timing alone might be enough for some things, So we'll see how that works out.
90 is big.
90 is big, and high to high, we have like almost 45 weeks, 48 weeks. So that's something. So it looks like we're not done with something. Looks like we're getting pulled into something, which is this July 8th business. A lot of things can happen in between. So we can correct for a couple of days, go up a couple of days, which is not a problem. And that's why we want to watch those levels that we talked about on the 30-minute. These are the key levels you guys want to watch. A correction down to here would be no problem. Even a correction down into the 180 level, 54.48 is not a problem. These are all perfectly in line. Anything you want to add?
No, I think that sums it up very well. The timing's coming up, and we got to see what price wants to do here.
Yep. All right, let's go back to the daily. And yeah, other than 30-minute numbers, really 55.66 is the number. You guys can copy the trend lines. I think they're fairly steep. The 1 by 1 here looks good. And when I get into a vacuum like this without a whole lot of lines, what happens is we can have a lot of volatility. And that's the other thing, Ben, we talked about right before the show was, after a quiet week, it's possible that we get some extra volatility next week. So we'll have to watch for that.
No question.
And so that's why there's a gap here. There just isn't anything to hold that, although we have prices right above. So, all right. Let's move on to bonds.
Big decision spot here.
We have the ABCD we drew out. But the cool thing is it got right on top of our level here, and we're holding above. And long as we're holding above, our rule is, well, it could move a little higher. So
yeah, could go up to that full square.
So what's interesting is it's not holding below it, it's holding above it. At the same time, we have to respect that I think there's a quarter of a square line up there. That's why it's holding it. And this 119, I can't remember how I got that right now, but it's been there for a while, and it's been a good reference. But if I were to drop the quarter, so quarter's right above, it's holding right under the quarter level, but above this, so we'll see how that plays out. But long as it's above the 119.16, I wouldn't be doing any funny business trying to sell it here. Let it break it and set up in that way. Other than that, this could also run up into these dates. So we'll watch that.
It's a good summary for the week. The weekly bar was an inside bar.
Yeah, see, so what happens next week, right? Well, this is
Yeah.
the daily, but yeah.
When you flip it, you'll see the
Uh,
inside. I was just looking at my notes. It's a weekly inside bar, and
which could lead us to a, active next week. So
that's
that's
correct.
usually what happens.
Hmm.
So we have an inside bar. So the key thing, yeah, it's an inside bar, and it's
And a
above
small bar too.
very tight and
Yeah.
above the trend line.
Hmm.
We'll see what happens. If it's a real breakthrough and we're really going to rally, we should have done it this week. So they're probably waiting for something. We do have a potential ABCD going up,
Hmm.
but with this high here, we have also potential ABCD going down. So I won't put it in
Yes.
yet,
Yep.
but I feel like, is this like a false break out of the triangle, or is this like a true break? I think it's a little too early to tell. We'll watch the 119.16 level and see how he sets up. Not much to talk about because, not a lot of activity this week. So,
Right.
okay, let's roll on to crude, which, it's like the little engine that
Great.
could, right?
Yeah, had a really nice week. And again,
Mhm.
nobody's interested. It's completely quiet.
Quiet. Yeah. Didn't make it easy, but it had a nice week.
Yeah. Yeah.
And well, it nicely went right up into our zone. And that's really resistance. It's probably struggling with that. And our upside is really 83. And we'll see. I mean, if it's really meant to be, we'll go up and squeeze into that. Otherwise, here's our range. We're from the lower part of the range. We call this out as support 73.50. And, we talked about how the movement should be towards 83, and we got there. Now we just pause and wait to see how the market sets up. Anything you want to add to that?
No, I'm going to talk about crude.
You are, right? Okay.
Yeah.
All right. So let's go on to the weekly. And the reason that went exactly up there and stopped was as exactly 50% of the square that we drew up. And the square
The
that we
little
drew up,
box. Yeah.
yeah, the box was a quarter of the square of
Hmm.
60. And so we're at 50% of it, which is smack in the middle. This is why, there isn't a whole lot I can say. It's in smack in the middle of that. And we're more or less smack in the middle of this triangle, big weekly triangle that we've been talking about.
Hmm.
So we're not near breaking out of that, but we will one day.
Yep.
Up until now, so up until then, now we're really it's at this 83.50 level. But here's 81, let's say 81.50. We'll call that the middle line. It's really a matter of can we, get above it and move towards, 88, 89, or are we just gonna consolidate more on the lower part? So the move looks okay. We just have to wait. Nothing, I don't know, nothing surprising, right? It's just doing its thing in a consolidated mode.
Sure.
Gold, same thing. Not much to say. It's just consolidating,
And
and
it's a bullish consolidation.
it's very bullish, and it found support on the 1/3 line. So
Hmm.
we'll just let it be, and as long as it's in here, I'm not ready to, call this to sell it. But it looks like it's consolidating, and it might get a little bit weaker. Not much, if we could take out the 1/3, which is right around what is it, 23.05, let's say. So 23.05, next level below that would be 22.58. So that would be your sort of the range to watch. Other than that, yeah, it's consolidating, and
Hmm.
and we are making lower lows and lower highs. So it's possible if we take this out, we're going to end up on the 50% of the square. So keep that in mind, and that could be a good trade.
Could be the flush
Yeah,
before it goes.
and those are fairly decent to get in on.
Hmm.
And here's the weekly. We drew the 2x1, and it's very, very strong. We'll see. Looks like we have some space for next week to
Hmm.
hold above it. But this is the thing, this 270 is kind of strong. It has to really play it out. We'll see how well it plays out. We talked about last week how even if it gets down to 2100, 2000, this 50% of the square, to be clear, is 2060. Gold's still in a very strong place to just bounce on short notice. That's why shorting is a little bit nerve wracking here. And you can see like it really isn't moving, right? It's not like it squared out. What happened was it found really hard resistance. So we'll watch that for now. Let's move on to copper. Same story. It's correcting. This squared out. We call this out we were watching the first quarter, if it held above, it'll be a little bit stronger. Nope, we gave out, came down to 50% of the square, lost that. So I'm guessing if we're going to keep, consolidating below 454, the next level we're going to test is around 432, which would be classic support. We have a high here from January 23. So it'll be, I don't know. I guess it would be normal for it to come and test that.
Sure. I have a weekly half square at 433, so it would be perfect pullback weekly basis.
Yeah. So if you guys are shorting it, great. We don't have those kinds of souls. So let's go on to the weekly. Weekly, this is the thing. It looks like we're headed right into this 144, 420. What'd you say, 423 that you have?
433, yep.
433 is right in that, right about there, a little above that. So it's in that zone. So I would expect, we haven't even had a counter trend on the weekly yet. It's just been selling off, right? So I would expect, we'll watch the next price action to see how it sets up to the upside when it does. But other than that, it did come into a 216 by 216.
That was a good cycle. We called that too.
Yeah, we called that. And I was going to move this. I think it was perfect. It's just the premium continuation chart throws off the level, on some markets. So it looks like it got there. And the reason I say that is just a quick lesson. You can see how we held 50% here before we ran up.
Yep.
So it all adds up in that sense. All right, let's move on to the dollar, which did
good week for the dollar.
Yeah, didn't disappoint. Not raging, but didn't disappoint. So dollar, what can I say? We had this trend line. We called out this support around 103, 104, and the dollar held it and started moving higher. And our target from there was 50% level, 106. And we're just within reach, couple of clicks from there. So let's see what happens. If we can get above that, 107 is the next target. But it really feels like we're consolidating between that support level and the 50% of the square. And if that's the case, we'll have to just trade within those boundaries, right? Yeah, until we get a break out of the square.
And you can see the triangle on the monthly when you look at it too. It's in a big triangle.
This big one like that, or bigger.
Yeah. Yep.
So, well, let's see if we can find it on the weekly. But anyway, so that's what's happening on the daily dollar. So we can expect it to go higher, especially if we can clear the 50%.
But you notice, Barry, how when you look at the markets on the bigger perspective, you can see a lot of them are triangulating and consolidating, and they're like building up energy for something big.
Yeah.
There you can see it right there.
And that's how the whole market works. What do they say? Like commodities consolidate 70, 80% of the time.
Yeah. And then they run 20%.
Yeah. So we just have to be patient 80% of the time.
That's right.
Be ready to run. So is that the triangle they're talking about?
Yeah.
This one here? Yeah.
Yeah.
So there's another line, I think I was using the 1 by 1s, but there is a line that goes through here. Pretty good triangle. Let's see, might break it here. Boy, that ABCD really did the number. That's what happened, right? We had right up into that and stalled out, came back to the 1/3. And again,
when you look at it on the monthly, it's like a 1.5-year triangle. So it's a lot of energy, potential energy being built up.
Yeah, it's almost scary, but let's see. Let's see what happens. All right. So that's it for the dollar. If we can get about the 50% and break that upper trend line, clearly it could be a breakout scenario.
Yep.
So 106, about 106.15 is where the 50% is on basis the weekly. 106.75 is the target. And obviously if we can get above that somehow, 112 is the full square. And we can't say they can't get there. You saw what happened here. So
right.
And a beautiful square, right? Okay, so we talked about the weekly 90 bar count on the S&P chart. So here's a weekly count that came in on the dollar. Look how it nailed a high.
Beautiful.
Good example. Since we started with the weekly 90s, here's a good example to finish up with. So yeah, this is a great example of how a 90 can come in and how powerful that is. Look how long, how large the correction is.
Right.
So these things are possible. Not guaranteed, but possible.
You got to notice them.
Yeah, you gotta follow through and see. All right, next one is the euro. Kind of went as expected. 108, as you guys know, that's our key level. We got under it, and that was it. Couldn't do anything, and it's been to the downside ever since. And I would think it's going to trade lower as long as we're on below 108, and we haven't quite got to the 50%, which is 106. I would say it's weak. Here it happened before. So we have 106 to the downside, and also the ABCD, the big ABCD would be 105,379. So it's in that same area. All right, let's move on to the weekly. Take a quick look. And speaking of triangles, lots of
There
triangles.
you go. Yep. I'm telling you, they're all over the place.
And that all means something, right? We're all getting
Yep.
wound up for something.
Winding up for a big move.
And these windings can go. I mean, looking at the size of these are year and a half type of runs following.
Nice.
And anyway, so we're winding tighter and tighter. Not much to add, really. And the 108 is sort of our midline. We're going towards the lower part of the range. We'll have to wait and see. We talked about the lower targets, so that's all I have for the weekly. Not much to say when things are kind of sliding, in the direction that you're expecting.
Yeah, that's true.
Let's see. Are you talking about natural gas? Not much to talk about.
No, it's doing a little ABCD down. Let's let it finish up.
And we ran into quarter square resistance 296, and it's correcting. Yeah, well, it's best to probably watch that. And Hang Seng kind of got stuck around the 1854 level that we talked about. And we're kind of going back and forth and can't quite get above the 50% of the square, and can't quite get below the 3/8. So we're kind of stuck in the middle. We'll wait to see what happens. But so far, I mean, holding above 3/8.
It's a good correction. It's a good bullish
it's
correction.
Yeah, exactly. So 17,756. It's in very good shape. And and if we take that out somehow, I think the next stop is right into 17,217. Just call it that. So it's got a little bit to go. Anyway, that's it for that. That's all I have. Let's put it back to you and go
Excellent.
on to thanks. We'll go on
you make the doldrums exciting.
Well, doldrums are in the commodities, eh? I mean, that's
my God, yes, it's Snoozeville.
But
it's okay.
Yeah,
listen, it's part of the process, and let's do NQs and Bitcoin first, and then we'll talk about the Snoozeville that's commodities right now.
And it's these doldrums. That's the time you can work on all your charts and get everything lined up and do some house cleaning around the charts and all your research.
Yeah, we get the timing counts, and you and I have been we've been diving deep. I've been diving deep on these cycles, and you and I did a bunch of that today. It's a good time for that type of research while you're waiting for these markets to start trending.
Well, Ben, this is the ABCD that you were telling me about, right?
Yeah.
Nasdaq already tapped it.
Yep. Pushed a little bit above it, but then we reversed. So now, as you can see on the daily, the key is this half square. 20,081. We get above it, it opens up the full square up here. If we get stuck below it, then we see, what kind of correction we get. Do we stop at this full square? We could come all the way down to this half square and still be bullish.
Right.
So there's a lot of air here it's got to work with. One of the things I was looking at, and you and I were talking about this, I mean, we did 44 from the April low, which is a 45 essentially, into a summer solstice. So there's something there. Is that the end? Probably not, but it's something that we need to notice. The interesting thing, you've gone over a lot of those counts, the 180 from the October low last October gets you to July 4th, first week of July. So it's there's a lot of stuff that's starting to come on the radar in this, first, second week of July. So we just need to be aware of that. We don't want to presume what's going to happen, but we want to be aware of if something happens that it could be significant. But on the daily, to me, this half square is the key. We watch that level to see, which is the next half
Mhm.
square move most likely to happen. Anything to add here on the daily?
Well, Nasdaq's definitely leading, and the S&P sort of met the same levels. Yeah, looks strong though. I mean, above that square, it's clearly strong. That 270 degrees.
Yeah, super bullish above this.
Hmm.
And even, as I said, even bullish above this half square
Right.
because we'd just be coming back to check these highs.
Yep. So we need
So,
some kind of a timing element to to call the high. So we'll wait for that.
yep, no question. Let's take a look at the weekly. There's your weekly. Interesting thing is we're stalling here at this half square,
Hmm.
which is normal. And you say, okay, let's see what happens from here. If we get stuck under, then we're going to come down and probably test these highs and test this full square, and that's going to be a big test on a weekly basis. If we can get on top of that, then we, can stretch out and go on up to the 120 here.
Hmm.
So we'll see. We'll see how it goes. But you can see there's nothing bearish about it. The other thing to talk about is the 90 that we were discussing, and that's that week of July 7th.
Yeah,
And
there
that's
it is.
that's that's 90 off the October low,
Hmm.
October 22 low. So it's there. We got to be aware of it. We could roll right through it and it could be a non-event, but as you always say, 90s don't come around. 90 weeks don't come
Yeah.
around every week.
Nope. Nope.
So something to be aware of. Let's look at the monthly. Monthly is full on bullish, and you can see until we fail and get below this 108, which is basically three squares of 36. Until we fail and get below that, this thing is bullish.
Hmm.
And it's basically opened up to the half square here, which is, call it 21,100.
Yeah.
So we have to see any corrections, any pullbacks. We want to see it sit on top of this here. I
What's the
mean, we
high
could,
there? What's the high in the Nasdaq right now?
it's about 20,371.
Okay, 371. What's funny
371.
is that, if you take the square of the literal square of 144, it's 20,736,
Oh, interesting.
which is right above.
Yep, right above. And timing wise, we got 22 months in August from the October 23 lows. Or I'm sorry, those are the October 22 lows.
Hmm.
52 weeks 52 months in July from the COVID lows. And if you go post 2016 election, 101 takes you into July as well. So there's big longer term timing here coming up too. This July August period looks pretty hot from a timing
Hmm.
standpoint. But we'll see. We'll see how we move into it. Anything else to add here on the NQs? Because you're right, they have been leading, so we want to watch them for signs of faltering uh, in terms of looking for overall market weakness.
Well, your counts look good. Let's just follow through.
Yeah,
Everything. Yeah.
we see. Let's
Mhm.
look at Bitcoin. Here, Bitcoin, I think, is a perfect chart that summarizes the activity these days.
Yep.
Beautiful move up, right? Real strong,
Hmm.
powerful move right into the full square. And then look what we've been doing since.
Yeah.
Just sideways, boring. Everybody's, looking for the adrenaline rush, and it's just not happening yet.
Hmm. Hmm.
Now, that being said, overall picture, this consolidation is bullish because it's basically consolidating, in this full square, which is right near all-time highs.
Right. So
Uh,
far,
un-
it looks good. Yeah.
unless we take out some lows, then you could say, okay, that turned out to be distribution. You know, for this from this point, from my vantage point, it still looks very bullish.
Hmm.
The only trouble would be is if we start, losing this full square, which is around 62,000, and then you could even come all the way down here to the next full square, this sort of hatched area that I have, and it would still be bullish.
Right.
You could come all the way down here to the 50,000 and check this and then go again.
Mm-hmm.
So, but this summarizes the action in a lot of commodities. Let's talk about the commodities. So the grains continue to correct. They're getting close. Just nothing that's from a momentum standpoint or where we want to jump in yet. Let's let them finish up, and then we can get back on the grain train. In the softs, last week I highlighted sugar. Sugar basically went up and down and went nowhere this week. So I want to
Mm-hmm.
let it kind of get through this congestion it's in now. Once it gets that a break, I'll either throw an update out middle of next week if it happens, or we'll cover it on next week's show. Cotton's interesting in that it just took out a low, so I'm watching there to see if we have that sort of clean out low before we get a big move in cotton. So watching for signs of a reversal there, but nothing yet. Cocoa is interesting. You and I were talking about that. It's setting up for a really somebody who's got high risk and can be aggressive. It's setting up for a short.
Mm-hmm.
So if you're so inclined, take a look at that. And coffee is dailies in a triangle. It's very bullish, on the bigger picture bars, monthly, weekly. So we're just waiting for this triangle to resolve, and then we'll get back on coffee. Berry covered gold. Silver is doing the same thing as gold. It's doing a very bullish correction and consolidation. We're going to let that play out, and we'll jump on that once it starts moving. The one we do want to cover is crude.
Mm-hmm.
And I want to show you something. Barry did a good job covering crude, but I want to show you something about crude, which looks really interesting. So here's the daily. It's going to be on the monthly and the higher time frame that you'll really see it.
Mm-hmm.
So we got a higher low. We pushed up. Last week we talked about, after this little consolidation and reversal, that this was a good spot to get involved. And we had a decent, although fairly boring for crude for sure, positive week and a move up. This, I think, will continue. As Barry noted, we're in an area of resistance. So if we slow down here a little bit, that's okay. Pushing through that'll really create the upside momentum we want to see in these things. Let's look at the weekly and the monthly,
Mm-hmm.
especially the monthly. The weekly, there's your big triangle. We've got two up bars. So you can see this week we had a nice up week. We're going to be heading into resistance around next week. It's going to be just under 85. Obviously, if we can push through 85, this thing's really going to go, because that'll give us the breakout of this big triangle. The thing I wanted to show you was on the monthly. So the monthly right now, if we close the month, we wouldn't have an outside reversal up, but we'd have an outside bar.
Right.
If we can get a monthly close over 81.57 this month, and there's about 6-7 trading days left in this month.
Mm-hmm.
If we can get a close over that, we have an outside reversal bar on a monthly basis. And that's big.
Mm-hmm.
I mean, outside reversal bars are big. Monthly outside reversal bars are really big. Still stuck in this triangle, but that outside reversal, if we get the close, above that 81.57, which was the previous month's high, if we can close above that, it may be that, starting the run to give us the breakout of this triangle, and on the weekly, this triangle. So that's the big thing that I was looking at in crude, was watch that monthly bar for the next 6 or 7 trading days and see if we can get that outside reversal up structure.
Mm-hmm.
Anything else to add on crude?
No, that's good. It's a really good point. Coming towards the end of the month, it's good to remember those things.
And it
And
really helps. I know it helps you, Barry, but it's super helpful, I find, to really focus in on make sure, I review these monthlies every week to see how they're progressing, where they're going, what's happening, because it does give you that big picture view. I mean, just look at crude here. This whole triangle, is sitting on top of this entire structure from 2000, say 14, all the way to 2020.
mhm.
And I mean, if you're not zoomed in on the daily or the 4 hour or the 60 minute, you don't get that kind of view. And that's why I cannot emphasize more how important it is to look at those monthly bars to have the view of what's happening in the really big picture.
And we talked about high time frames, double time frames, dual time frames last time or the time before.
Right.
And if you just take that triangle from the high back in, let's say, take the 50% line from the 2022, mid 2022, that 50% line, you have the vertical
Mhm.
one in time.
Yep. Oh, right
I
here.
mean, if you take every reversal, you don't even have to trade that month. If you just, soon as the prior bar low or high got taken out, you trade in that direction, you have 1 or 2, 3 month trade,
Yeah, that's true.
right? In one direction.
That is true. It's very
And
true.
and that's the thing. Once the monthlies turn, you have some momentum behind you. That should be the higher time frame, right? Just like we talked about daily, 4 hour, 30 minute, those combinations. So the
Yeah,
higher
for
you
sure.
go.
And the topic I wanted to talk about today, Barry, and I think it's timely because given when you have these time counts come in and we have cycles, that are hitting, how do you manage the sort of the weight you put on the cycle versus the weight you put on the technicals? Because what I don't want people to get frustrated with is, oh, we get a 90 and we don't see a big move, or we get a 90 and we don't see a V reversal.
Mhm.
What is it that mentally that you do to hold the idea that, okay, these are critical time markers that we're getting, but it just because nothing happens doesn't mean you disregard them in the future.
Well, something happens. Maybe it's not what you expected. Are we talking in terms of a square, like the 144 we saw in the S&P?
Yeah, let me give you the screen and you can
Mhm.
you can give some examples. What I don't want people that are just sort of learning about cycles to have either the wrong impression of how they work, or
Mhm.
or the wrong impression of how they're supposed to use them, and therefore they can get frustrated and they just toss them away, say, okay, this is something else that doesn't work. I'm not going to mess with it.
Okay, good
Because of
point. All
either
right.
unrealistic expectations or because we don't get, some cataclysmic event on us on when a cycle hits. Oh, that's not worth me messing with. It's not worth me looking at. It's not worth me monitoring or learning about. So can you talk a little bit about that, like how you deal with the fact that not every 45 or not every 90 or not every 60 or 144 creates a reversal, creates a big move? What do you do when those come up and let's say things aren't spectacular in terms of what happens?
Well, I mean, that's all through expectation.
Right.
And I think the key thing in the cycles is you are ready to observe, right? It's all about watching to see if the cycle got traction. But before that, I think the bigger foundation should really be education, and also properly testing these ideas. If somebody's interested in cycles, they should go back and look at what happens after cycles hit and after cycles miss.
Mm-hmm.
In theory, cycles never miss. We just didn't catch the correct one. Cycles are continually going. Know what I mean, Ben?
Yeah.
Right?
In other words, like a 90 comes up and there's a bigger cycle that's dominating it. So the 90 doesn't cause a reversal. That's the type of thing you're saying.
Absolutely. It might be a
There's something
180.
else happening, right? There might be a
Yeah.
144, a
Hmm.
270, a 360, something else is going on.
Exactly. So one of the things what you can do is you can triangulate few different things, and to see if we can get into the same zone. And even if we do that, you still have to wait for evidence. What normally happens if a cycle comes in and a leg is terminated? Okay, let's say something's been moving up. So let's take the S&P. Let's take this example. We just have happen to have it here.
Mhm.
We'll take it from the October 2022 low, and let's get it through the first square so we can start talking. Okay, here's the first square. We got on top of it, and there's no timing element here, you know. Now
Right.
there was a timing element here. Let's
Right.
start there. That's a good point.
Yeah.
The way I would look at the way I read the charts would be, you know, where we went up to the 72, where would the correction be expected to halt? Well, 50% line.
50%. Yep.
So it came to the 50%. Now we ran back up to 72. Now the question is, are we going to hold again? Not only did we run up, we were running 36 by 36. So
Right.
that's a good. So we came 36 by 36. So what happens next? You know, are we going to turn? So exactly what we did when we walked through the S&P, you know, the highs that just came in. You
Right.
have to walk through it and look for evidence. So in this case, what did we do? I think we probably went up 90, it looks like, because
It looks like it was a 90, and then it did another 36 down in time.
Mhm. So let's just confirm that where we went. So we went to 90, and so we did 36 earlier on the 36 chart. So here it went 90, corrected to the 50% level,
Mhm.
and we started moving higher again. So now we know as soon as we did the 90, we took out the 72. Okay, there was a higher cycle in there. It wasn't the 72. We ran up into 90. Okay, if that 90 is actually working, then we should correct and 50% should hold, just like the 72 held down here.
Right.
So 50% held. Now we're going back up to 90. All right. What happens up there? So we ran up to 90,
Got stuck.
got stuck. We corrected a little bit. So here's the thing. Like we can call it out and say, you know, we have 225, you know, is it 225? Yeah. And we're about to, you know, we could possibly turn here. Okay.
Mhm.
This we can call, you know, we can say, well, we went up 90, we're going across 225, and we could turn down. Okay, fine. If it turns down, what are we looking for? Okay, turn down. First counter trend. We're looking for it to move. It didn't, right? It really didn't. We had one day down and back up above the level, above 90. Once it got above 90, clearly, like it did here, you know, that 90 cycle is not there. This timing is not there. We just got above it. It got blown out. So there's something bigger. So you just, you trade it, at least we do, up until we get to the next level, which is the 50%
The half
level.
square. Yeah.
And in between, we didn't really have any timing. I mean, yeah, we had 270, but we're not just looking at timing. We need price to be there with it to support that.
Mhm.
And here we didn't have it. So no timing. We were waiting for a correction, came back down to the 90, right?
Mhm.
One bounce, flush, and we started moving. Now I could put the 72 and walk it through the same way. You know, yeah, it's a different square, but watch. If you put the 72, then we can say we got through here, right? There's where we took off on. This would be 90. This
Mhm.
line we got above 50% of the 72, got up into there, and you can see 2 days down, back up. We went up to 288 by 144. Close enough, you know.
Right.
What
Yeah.
do we expect? We expect it to not take out the 144. We expect it to reverse, and the counter trends should be sold by the market, by sellers. So,
Mhm.
and that's what happened. We came up here, little inside day, lows got very narrow day. I'm sorry, narrow day, lows got taken out, down. You know, inside day, low got taken out, down. Outside reversal here, down. One day up, down, down, down. So that's the sort of the pattern. You see how the character changed. It wasn't the same before, and it's happening exactly following a square. So when that happens, you just follow through. You have to take a shot when you have price and time, but you have to pick and choose, right? Limit your risk. This is where limiting your risk comes in.
And what you said is so important, the character change, because I always talk about, to help people with the understand cycles. Cycles change human perception.
Yes.
And so what we're looking for when we have a timing cycle or we have a rebel yell cycle, we're looking for a change in character. And the way we tell that is by what happens to price. Well, did you have big bars going into it and now the bars are small? Did you have a trending market going into it and now you're sort of congesting, going up, going down, and going nowhere? Those are the kind of things you look at to say, okay, that's the effect of the change in perception. It's because it's not always a 180, right? Where you go up and it reverses and heads the other way. That does happen, but it's not always. Sometimes it takes some more perception on your own part to see, okay, what is different about the market and the way the trading is going and the tenor of the market after that cycle came through.
Hmm. Exactly. So, I mean, the cycle work is a little bit complex, but it doesn't have to be complicated. And so you have multiple things you have to watch. One of the things is price and time and the changing character, just like you talked about. And then you look to see, especially if you're using squares, you want to see, well, what's a normal correction? What's a measured move? So if you're using a 72, we would expect it to, if you take out the 50%, we'd expect it to get to the other side. So we came down into 50%, little bounce. So this is what happens. If that's squared out, this becomes a lower high, right?
Yep.
And once that low of the high bar got taken out, we can be trading on the short side. So here, that was the next counter trend, didn't take out the high, and we traded lower, counter trend, lower. So all the way through. Now, once we got down to the quarter of the square, which is this line, the gray line, we rallied back into the 50%. So stalling at 50 is a great place to sell again.
Yep.
Just like we buy there. So we stalled here, and this is where you would need a lower time frame to, pinpoint the entry, like a 30 or whatnot. And you might take a couple of shots at it, but look, you caught the move down. And we know we're not trying to buy here. That's the main thing, because we're still going off the square.
Right.
So what we came down to 144, the support, if you just draw lines, support there, came back up again. And this time what happened? We got stuck. I remember trading this actually. We got stuck above the 50%. And I remember this expanding triangle, right? Just really hell. But it's above the 50% of the square. It's moving higher. And so it just went up to the expected place where 144. Got there, broke out. What happens then? You're up again, up again. So the thing is, I think since we got into the cycles, once a cycle comes in, we want to see it go to the complete the expected move. And the expected move, then this is where the complicators come. We got to look at historically, what's a normal vibration? Is it correcting in what kind of a square? Is it 60s, 72? What's a normal correction? So once you have all of that in your mind, then when when you move, like I didn't even square that out from here to this low will also have some kind of a square. It might not be the 72, right? Because that's just coming from that. So once the price squares out, we can go there and use that.
Maybe a 60.
Yeah, 60s, 90s. So, it's one of the main squares will always catch it. So if we get 90, so we went 90 in time. So the reversal bar was there by the weekend. It really didn't break till here. So if you remember how I've been putting these on the gap so if you do that, you see how it works out beautifully, right?
Perfect.
Especially since these are trading day calendar day charts.
Calendar day, yeah.
So the correction came exactly 90 days, right? So 3 months, perfectly normal correction. So that's timing. So what has to happen when the timing is there? So here's a good example of timing, right? So we had 90 days down. What happens next? Well, the market better reverse and go the other way. That's the idea. So here, just textbook, reverse, never look back, went through the 50, bam, bam, bam. Only place that stalled was when it got up to the, where it started. So again, that's just to show you what happens. This is a very normal, healthy correction. 90-day correction is a very, it's the ideal. This is the textbook correction. So that's how you play that.
Put a chart up of the ES because I want to show I like your 30-minute ES because I wanted to. I put a note out this morning about the summer solstice and the change that we saw just overnight, and you could see here we made the high on the solstice on the 20th, and for the first time in a while we took out a previous support level, and stayed under it. And so that, to me, that was like, when I'm looking at it, I say, okay, what's the effect of the solstice? Well, the change in characters, we just took out support this is again on a short-term basis, but we took out support. And if you just look back left, you could see all those sideways movements were sort of creating stairs on the way up that we didn't
Hmm.
get below.
Right. Exactly.
But that timing comes in, and you could see it on a calendar with a solstice, but Barry has it here. I can't see at the bottom what that is timing wise, but there's timing was right there. And after that, now we're getting stuck. Today, we're getting stuck under that previous sort of stair that we had built.
Hmm. So that's, yeah, changing character is something you really want to watch. And the changing character is really tied to the market that you're trading. So every market has its own character, like natural gas trades very different from silver,
Yes. Yeah.
So once you know what the markets you're trading look like, then it's easy. So here it was 630 is where we came up into.
Sure.
And yeah, the character definitely changed. That's really the main thing, the character changing and the pattern. Also, we don't have to identify a change in the cycle on the first 3 bars. That's the other thing.
No, no.
We have plenty of time. So you want to wait to look, just like we walked through. And change in character is not just price, also place. Well, here,
Mhm.
not only did we change the character and the volatility increased to the downside, but we also took out the channel.
Mhm.
We took out a very important level to 70. We'll see what happens on Monday, Sunday night, Monday. But that's the idea. You want to watch it. You want to watch to see what happens. And in the longer term, it might take months, or days, at least weeks and months to figure out where the next point is, a counter trend. And often what happens is we forget what happened at the high,
Right.
and we just go on, we get caught up in the day-to-day thing and we forget what happened at the high. We forget what happened at the square. So for example, when we had this square all through here, up until we broke out, we were referencing back to this square here
Yep.
because we wanted to see, is that square going to be active? So once we did the flush and held the 1 by 1, and we came back inside day right there on the 4th, and then we broke out from there on.
That was it.
Yeah, it was clear this square is done, and we're going higher. Where's our higher target? Well, that was 55.66. So that's kind of how you deal with it. You have to deal with it step by step and never forget what leg or what cycle you're in now. So once the square came in, it's either going to correct or it's going to blow through. If it blows through, fine, you trade it that way, wait for the next one.
Yep.
If it corrects, you follow through on the correction to see if it's a bigger correction. Is it just a 1 month correction? Is it a 3 month correction like we saw in the example with the cash market, right?
Yep.
So that's the idea. It's a little bit of a dance, right? Because you're never certain. You can never really pin it down, but you're sort of dancing the entire time because you're
Right. You
trying
have
to.
a bias, but you remain flexible, right? And you let the price action and the price data, confirm or change your bias.
It's a little bit like hunting, when lions are out there, trying to find the exact, like the zebra they're trying to go after.
Right.
They watch, and they watch, and there are lots of them out there, but they wait for the right time, right place, the right one. And once they find it, they go after it. So it's kind of like that here. Once we see the pattern and we see the bars, we see each, what happened inside bar, outside bar, what's happening. Did he take it out? Is it going lower? And of course, this is where the complexity comes in. It depends on your depth of understanding of how all the cycles work and in that market. Then okay, this is a great place to take a shot because I can manage my risk. You take the
Yep.
trade and you manage that trade. If it, then you ride it as much as you can, counter trend, you sell it again. So there are some things you can do. If a high really comes in, the first few counter trends are where you really want to get settled. And like
And
here,
start
there's
trading it.
one,
Yeah.
there's two. Yeah. Once you do that, the rest of it you want to hold. So the nice thing about being patient is what if a cycle really kicks in this case, let's say squares out and we start another leg and it's moving in the sort of theoretically correct direction, then you can just trade that and just hold it till it gets to the next level, which, for us is squares and half squares.
Yep.
So, and you're not on the buy side till it sets up to the reverse side. If it gets to the resistance, it gives you the right kind of behavior. Here we rallied, came back, pull
Higher
back,
low.
higher low, pull back held on the angle, from here, angle to here, right? It held.
Yep.
So that's your signal. From there on, you trade the long side. So you're not going to catch corner to corner, but you want that, like a meaty part, a sweet spot in the middle.
Well, listen, it's a very complicated
Mhm.
topic, cycles, but I wanted to make sure we touched on it this time. That's a great explanation, Barry. I really appreciate it. And I think the people and the listeners will appreciate it. Please make sure you like the videos and ring the bell and subscribe to the channel. We appreciate all the support we're given, and have a great week, everybody. Barry, have a great weekend, and we'll talk next week.
Thanks, Ben. Good job. Have a good weekend. We'll catch you next week.
Take care.
Bye-bye. Thanks.
Bye.